This is going to be the halving, but it is going to be the most significant halving in the history of Bitcoin. This is because it is the same as someone agreeing to buy $8.5 billion worth of Bitcoin per year for the next 4 years. Would you agree that this is the effect on demand? It currently costs $8.59 billion, which is equivalent to $23 million every day at the current price. Demand for exchange-traded funds ETFs has increased by 4 to 10 times the daily supply over the course of the past year. The fact that there has been a significant change in the supply and demand is more significant than the fact that this is a very large number. According to Michael Saylor, the founder and executive chairman of MicroStrategy, the year 2024 is going to be a significant one for Bitcoin, particularly in the 4th month of the year, which is when the halving event that has been anticipated for a long time will take place. Saylor is a well-known businessman and Bitcoin bull who believes that we are on the verge of witnessing the most significant split that has occurred in the cryptocurrency market since the first Bitcoin was established more than 15 years ago. There have been 3 halvings of the Bitcoin supply so far. For each one, the block payout was cut in half, which resulted in a reduction in the total quantity of Bitcoin that was in circulation. Each of the 3 has a significant impact on the cost. In January, the United States Securities and Exchange Commission gave its approval to a number of spot Bitcoin exchange-traded funds ETFs, which means that the second half of 2024 will be different. As a result of the previous reduction in the quantity of Bitcoin, people merely believed that it would become more scarce and valuable as a consequence of this change. Additionally, it did it not just once or twice, but 3 times in all. However, ever since the introduction of Bitcoin exchange-traded funds in 2024, the tail has become much more significant. Through these exchange-traded funds ETFs, thousands of institutional investors from all around the United States have either already purchased Bitcoin or intend to do so in the near future. Because of this, the demand for the most widely used digital currency has increased to a level that is far larger than the daily supply. It will only be a matter of weeks before the supply is reduced in half once more, which will result in a significant and unprecedented disparity between the supply of Bitcoin and the demand for it. Within the context of his most recent conversation with Crypto Nutshell, Saylor discusses his perspectives on Bitcoin in the year 2024 and beyond. In addition to this, he discusses the events that will take place with Bitcoin after it is divided in half in April. The well-known business leader and billionaire investor claims that we only have a limited amount of time to get Bitcoin at a low price before its price skyrockets to the point where many individuals are unable to afford it on their own. We are going to show you some of the talk right now. To begin, I would appreciate it if you would give this video a thumbs up, check out the channel, and enable post notifications so that you may watch future videos like this one. Everything that you do is really good for the YouTube system, which is very important for the growth of the channel. Thank you very much, and I hope you enjoy the movie. That they are doing so well is not surprising to me at all. At first, I felt they would be quite successful. Over the past decade, I believe that desire has been steadily growing. Their arrival is the most eagerly anticipated new development on Wall Street. If Bitcoin were to go public, this would be the same thing. It is comparable to the initial public offering IPO of Bitcoin, but 10 different companies are coming public at the same time. Due to the fact that it is a good, Bitcoin is a good. There is no safety in it. The fact that companies such as BlackRock, Fidelity, Grayscale, Bitwise, and ARK are all putting Bitcoin on the market at the same time is a significant development. As Bitcoin is the finest exchange-traded fund ETF, it should not come as a surprise that they are doing well as ETFs. Gold, silver, palladium, natural gas, market baskets of commodities, and oil are some of the other commodities that are used to construct exchange-traded funds ETFs in addition to oil. For all of these items to be considered investments, the fact that actual products are not uncommon is the problem. It is possible to produce any quantity of tangible items if one has sufficient financial resources and skills. When all is said and done, the gold exchange-traded fund is the best of them all. On the other hand, if a significant amount of money is invested in a commodity exchange-traded fund ETF, that money is invested directly in businesses that produce commodities. Those items are simply put up for sale on the market. The price has not changed at all. Commodity exchange-traded funds were never a good idea for this reason. As for the SP index, what about it? The Spider SPY, which was released in 1993, was the first exchange-traded fund ETF and is considered to be the most significant event that has occurred on Wall Street in the past 30 years. To add insult to injury, the idea of creating an exchange-traded fund ETF that replicated 500 stocks from the market was quite intriguing. Furthermore, this was of great significance since it occurred at a time when people had lost faith in cash as a form of money and a method of saving in general. That exchange-traded fund ETF became the measure of money, and the SP became money. Because of this, that exchange-traded fund is currently the most successful one. The majority of the cash is held by SPY and all of the other exchange-traded funds ETFs that track the SP 500. However, those exchange-traded funds are not appropriate because equities are not conservative either. Consequently, if I were to increase the stock price by a factor of 10, you would get a greater share of ownership. To phrase it another way, if I were to provide an exchange-traded fund ETF, such as the SPTF with hundreds of billions of dollars in cash, it would be required to purchase all 500 equities in proportion. This indicates that they are required to pay any amount necessary in order to acquire Tesla, Apple, Google, and Meta. Even if they are paying an excessive amount, their pricing does not change. To put it another way, they are able to increase their equity by purchasing it at any price, since they are able to convince businesses to distribute a greater quantity of stock. Additionally, this makes perfect sense, which is a plus. It is reasonable to assume that employees in the company that provides them with stock options should sell their shares if the price of your stock doubles. They make a proposal to sell stock. Whenever they sell the stock option, you sell a greater quantity of shares. Simply said, the amount is determined by the price. When it comes to quantity and pricing, there is a degree of elasticity. This situation is exactly the same with regard to the items. Regarding real estate investment trusts, REITs, the situation is exactly the same. Bond funds are similar in this regard. The more money that is invested in those other kinds of assets, the more of those assets become available to be used. It is not difficult to locate them. Because Bitcoin is a unique cryptocurrency, investing in a Bitcoin exchange-traded fund ETF will not result in the creation of additional Bitcoin. Each and every day we contain 900 Bitcoin. Within the span of time between April 16th and April 18th of this year, we will hit 450 Bitcoin each day. 1/2 of the total supply of Bitcoin will be reduced by 1/2. Because of this will be the most significant half cut in the history of Bitcoin. BlackRock, the largest asset manager in the world, had contributed over 130,000 Bitcoin to its iShares Bitcoin Trust EBIT as of February 23rd, 2024, according to the most recent information that was posted on the website of BlackRock. BlackRock's Bitcoin exchange-traded fund ETF currently contains a minimum of 130,231.2 9980 Bitcoin. Based on the current market value, these coins are worth $6.64 billion. IBIT had around 109,609 Bitcoin in its possession as of the 14th of February. To put this into perspective, BlackRock has acquired more than 20,000 Bitcoin in the span of 9 days, and they have no intention of stopping anytime soon. A survey conducted by BitMEX reveals that on February 23rd, BlackRock and other spot Bitcoin exchange-traded funds ETFs brought in more than $232 million. The largest money was brought in by IBIT, which had a total of $167.5 million in it. ARK Invest came in second with $34.5 million, followed by Fidelity, which had $52.5 million in assets under management. It was the lowest amount of money ever taken out of Grayscale's GBTC since the coin's inception, with only $4.2 million being moved out on Friday. There have been net profits of more than $5.5 billion for all 10 spot Bitcoin ETFs, despite the fact that GBTC has seen a loss of $7.4 billion. Saylor believes that the enormous demand for Bitcoin will continue for a considerable amount of time in the future. More information is provided by the former chief executive officer of MicroStrategy regarding his forecast for Bitcoin in the year 2024 and the subsequent